Here in this video, we're going to talk about 3 dates coming for Tesla stock that will be very important in a short amount of time. But there's 4 events themselves, so technically 4 dates, but we don't have the 4th date confirmed just yet. Date number 1 is June 13th. Date number 2 is July 31st, and date number 3 is August 8th. Within a month, you're going to have what could be a massive rally for Tesla stock. And I want to prepare that for you here in this video. What I think could happen with these dates and for Tesla stock. Now, the bad side of this, or the bad potential outcome of this, really has nothing to do with Tesla. It has to do with how does the economy evolve from now until June, until July, until early August. And I will give my overview of that as well. I'm not as concerned about that as far as a downside catalyst for the markets, but it is something to consider as well that we will go over. And there's a clip from CNBC. This individual from JP Morgan, you'll recognize him. He gives you something very specific to watch for in broad markets. And I want to share that with you as well. So hit the like button, subscribe to the channel, and let me know what you think about this information down below in the comment section. That's the most important thing, to share your opinions down there. So the first date we have is June 13th. Now, June 13th is the shareholder vote day for Tesla. As Gary Black says, which these days Gary Black's not super positive on Tesla anymore, he says that this June 13th date will be hugely positive for Tesla if indeed Elon's 2018 comp package is reinstated by shareholders. He believes it will be overwhelmingly approved by shareholders. So going off of what Gary Black believes, and I think how shareholders think, this is going to be approved. Now, why is this a big positive for Tesla? Well, it keeps Elon at Tesla. But I think even equally as important as that from the market's perspective is it will keep Elon focused on AI. It will keep AI within Tesla, or it's a good step to getting Elon's 25% voting rights actually secured. We can then get a new pay package with higher tiers that are $3 trillion, $5 trillion, $10 trillion market cap tiers, seen as outrageously ridiculous today. But if it's like any of the other 2 comp packages, it will inevitably happen. And with Elon Musk threatening to devolve Tesla out of the Optimus division of AI if he's unable to get 25% of the voting power, as I was sitting here, I'm like, why is Tesla not appreciated as an AI company, right? As an AI stock to some degree, and they're doing projects that are the biggest revolutions you will see in AI in your entire lifetime. Optimus with robots, full self-driving, there is nothing bigger than that. There is nothing bigger going on right now in AI that will provide more value, time savings, and just overall positives to society. So why is Tesla stock not valued the part? Why is it not trading higher? Well, if Elon, the guy running Tesla that made Tesla what it is today, has been threatening to devolve Tesla's AI away from Tesla, that's a big risk that I don't think Wall Street wants to pay an extra premium for. So it wouldn't surprise me if this pay package goes through from Elon. We get a new pay package probably shortly thereafter that gets announced on August 13th. It wouldn't surprise me if that same week of, September 13th, that you actually get a new pay package actually, put forth for, and set a potential date to vote on that. I think Tesla stock may start to trade more like an AI stock, the actual value that Tesla will provide to society down the line, rather than what we've been trading as. And that's a hybrid, auto company, energy company, with a subscription service. So I actually think June 13th could be a very big day for Tesla. If you have not yet voted for the proposals, I voted for all proposals. Again, as I said in the last video, I don't think I know how to run Tesla better than the Tesla team. I'm not going to pretend that I do know how to run Tesla better than the Tesla team. So whatever they recommend is what I'm going to go with, okay? I think that's better for me, for you, for every other Tesla shareholder. But you want to go to Tesla's investor relations page and the shareholder vote guide. I Google searched Tesla's shareholder vote, and the first link was this one. And you'll click on what broker you have, whether it's Fidelity, and you'll click on this email I just dragged and, copy and pasted it into the email in which your broker account is associated with that. So, for Robinhood, I did Robinhood, right? No reply, Robinhood.com, Tesla. Copy, paste that into the search bar of the email that you have, your Tesla shares in, and go ahead and vote that way. And you might have to see other brokers to, get your actual broker. But that's how you want to do it, because if you try to search through your email, it's going to be very difficult to find it. I had thousands of emails with Tesla in it, and nobody has time to go through all that. So this makes it a lot easier, and you just go through and vote for all the different proposals. Now, the next event for Tesla, we don't have a specific date, but it is going to be Q2 earnings. Now, March, April, May, that's Q2. Tesla tends to report earnings early into the next quarter. So like 2 weeks, 3 weeks into the next quarter. So Tesla's earnings probably going to be June 20th, if not June 21st. As long as that's, let's just double check, make sure that's not a weekend or anything. Yeah, well, it might be like June 18th, which would be Tuesday. Maybe the next week of June 25th. So one of those dates is likely to be Tesla's earnings. So after the shareholder vote, that's probably when we do get a new comp package put forward by the Tesla team for Elon. So that could be an exciting time as well. Now, I'm bullish, exceptionally bullish on Q2, because delivery estimates are actually falling for Q2. And Tesla just introduced this 1% financing rate for the Model Y, which if you look at Google Trends data, if Google Trends is any indication of what Tesla deliveries could be, Q2 could actually be a new record for Tesla. Yeah, could be a new record for Tesla. Look at the trend in Google Trends that we are seeing. The Cybertruck's exploding. The Model Y is exploding. The Model 3 is not doing much of anything. It is going up a little bit, but not doing a whole lot. Actually, April was a very strong month for trend activity as well for the Model 3, the Model Y, as well as the Cybertruck. But just compare this to like June, July, August, even September, which tends to be a very bullish time historically for Tesla deliveries. I mean, look, this is nothing like anything you've seen before, okay, as far as overall number of searches. This likely is translating into higher demand, higher deliveries. If Tesla can pull off higher deliveries and beat the estimates, which, judging off of Google Trends, as long as nothing bad happens, over the next month and a half or so, or next, couple weeks, then you should be setting up for a very strong Q2. Especially if Tesla can give us some better margins as well, then Tesla stock could be off to the races just off of July 13th and Tesla's earnings, which will be some point in June. The next date we have is July 31st. Now, some of you guys might be wondering, what's July 31st? Well, I believe it will be the first cut from the Fed. Now, the next Fed meeting is 3 weeks, 5 days, 25 minutes from now. That will be on June 12th. You're going to go a whole nother month plus 3 weeks after that. So you're looking at about 10 weeks from now until July 31st. I think it's pretty clear. The economy is weakening, the consumer is weakening. Not last week, the inflation report that we got this week came in line with expectations, slightly softer than expectations. That's probably a trend that does continue, especially if you look at oil. Yeah, oil has recently went up a little bit again, but really ever since about April 5th up until just 3 days ago, oil had fallen a lot. Oil on a percentage basis had fallen about 11%. Okay, so I believe from that perspective, CPI is probably going to come in light again. And judging off of the components of CPI that came in light in this latest report, it's probably starting a downward trend in inflation again. We're going to have another inflation report on June 12th. You're going to have another inflation report in early July, probably around the same time, July 12th, July 11th or so. So 2 more inflation reports by then. If we have 2 more weakening inflation reports and an economy that's probably weakening further as well, you're more than likely going to get that first cut July 31st. Now, it's possible we don't get a cut July 31st, but I think it's highly likely that we will. Markets are currently assigning a 74.6% chance of no cut July 31st and a 24.6% chance of a cut. So whatever this is pricing in, over 50%, whatever's the majority, right, is what the Fed goes with. They've pretty much never deviated from what the markets are pricing in. Like 40 years or so now, they haven't deviated from this. So this is something to watch closely. And if you do get the first cut July 31st and the economy is still in an okay place, inflation is falling, that could set you up for a very bullish environment for Tesla stock. And then we have August 8th, and I think this has been covered a lot by a lot of different people, but this is the Robotaxi unveil. This is the lower priced Tesla model unveil as well. And this is obviously going to be huge for Tesla. And there's so many different outcomes that I don't want to speculate too much on this. There's just so many potential outcomes here. But it should be a very positive event for Tesla. So with all of these events, this could be a very bullish time for Tesla stock. And if there were to be a time that Tesla could break out well into the 200s, it is probably this period from June 13th through August 8th. This 8-week period could be very bullish for Tesla. The only thing that I will caution you on is if the economy starts to weaken too much, that the markets feel we have a higher chance of heading into a recession. That's where things become problematic, because today markets are assigning a 0% chance of a recession in 12 months. If that jumps to 20%, likely not a big problem. That's just some more weakening in the economy. That's fine. Markets can live with that. If you start to go to 30, 40, 50%, that's where things start to get a lot more shaky for stocks. Back in 2022, at one point, there was a 100% chance of a recession within the next 12 months. That's what Bloomberg was reporting. Not for long, for only a couple of weeks, but that's still what they were reporting, and stocks had a very bad 2022. So if the economy weakens too much, it's not going to matter what the Fed does. If the economy weakens too much, the Fed could give us a 50 basis point or 75 basis point, 1% rate cut July 31st. Is that going to matter? Probably not. Now, I want to share with you this clip from JP Morgan. They are kind of going over what to be watching for next in terms of downside in our markets.
Technical strategy Jason Hunter warns this could mark the terminal phase for the bull run. Joins me now to make that case. Good to see you again. The terminal phase, why isn't this confirming that the next leg is upon us?
Well, if you look at the rebound we've had from the 49.80, 5,000 target zone, that was our initial target zone when you saw that March, April short-term top build. The market's rallied from that, and clearly it's carried inertia again. These new highs aren't being confirmed by momentum. So what we think we're seeing potentially is, starting in March, April, that deceleration, the pullback, and now another push to a new high. If the market can't sustain these highs, and right on top of next resistance at 53.20 to 53.50, we suspect the market will stall out there. A pullback that then breaks the 50-day average again. We think you have to take that very seriously. Ultimately, the entire first half of the year, this price action we're seeing, let's call it a range between 5,000 and 5,300, may turn out to be a distribution pattern. It's hard to have a lot of conviction in that until we see the price action develop and the failure from the new high. But that would set what technicians call momentum divergences on the lower frequency charts, the weekly time frames, the monthly time frames that are already in place. That would set those signals, given the curve inversion, historically, that tends to mark the terminal phase, like we said in our note earlier this week.
I know, but there's like a lot of potential. A maybe. I mean, I'm wondering why wouldn't the market be able to sustain this move? There's a lot of suggestion that it won't be able to handle that. Why?
Well, so, again, taking a big step back, looking at the cross-market contextual data, the yield curve, 3-month, 5-year curve has been inverted now for 18 months. If you go back to the 1960s, leave out the period of 1970s when the monetary policy was so volatile, the equity market just followed the yield curve. If you look at the 1960s and the post-1980 world, it was roughly an 11 to 23-month lag between curve inversion and equity market peak before you got a bear market that was associated with a recession. Like I said, we're at 18 months in now. Right inside that window. So that's where you start to look for, problem areas. Like I said, we're not aggressively saying go short the market right now. In fact, on a near-term basis, tactically, until we see that deceleration, as long as the S&P is above 5150, where it broke out from earlier this month, it still carries bullish momentum with it. We're not saying aggressively go short, but if you do see that reversal unfold and then you get a break below the 50-day average, that's something I think you need to take very seriously given where we are in the cycle.
I understand, but if we obsessed over the inverted yield curve for the past 18 months, we would have missed the entire bull market. We would have missed the entire thing because we've had an inverted yield curve for that long, and all we have talked about is whenever you have a inverted yield curve, got to watch out. Going to have a recession. Don't be too bullish. And we've taken out these higher levels, and we're still talking about an inverted yield curve.
Yeah, so it's not the entire 18 month isn't the window. Like I said, it's once you cross the 11 month in, and if you look at that iteration when 11 months was ahead of the market peak, that was the COVID recession. So I think you could take that away. It's really 15 months to 23 months if you look at the bulk of the recessions in that time window. Now that we're at 18 months, you're now in that window. It wasn't the entire period that you look at the yield curve and say, a second you go inverted, you get bearish. That's not the case. But like I said, it's now you've had monetary policy in restrictive territory for quite a while, and the pattern's the pattern. Historically, when you get in this window, that's when you tend to see equity markets decelerate, form distribution patterns, and roll over.
I understand, but again, I think it's important to point out, I'll give people the fact that you don't have a recession without an inverted yield curve. But an inverted yield curve doesn't always mean you're going to have a recession, right? It doesn't. There's not one and the same. So
to the extent,
you could have an inverted yield curve for a long period of time and not have a recession. That's why this time, for a variety of reasons, I know that you get killed for saying stuff like this, that it actually could be different.
Sure, it could. And if you look, the two times you've had the 3-month, 5-year curve even marginally inverted without a recession was the mid-1960s had an iteration where the curve barely got inverted and then immediately started to move in the other direction because the Fed eased aggressively. And the other time was the mid-1990s. Again, curve marginally inverted, and the Fed immediately started to ease aggressively and caused the steepening. If the Fed throws caution to the wind and just starts easing aggressively here, sure, that changes the picture. But for right now, like I said, the curve's not just inverted, it's deeply inverted. It's been that way for a while. Those two times where you had that mid-cycle, slowdown via curve inversion, it was very marginal, barely went below zero, and it wasn't there for a very long period of time at all before the Fed started to move the narrative in the other direction. So, I mean, those are, this time, could it be different? Sure, it could. I think that's what the market's trying to say right now. And like I said, we're not aggressively short. We'll wait for the pattern to show up and the break to happen before we would suggest that aggressive bearish view to actually execute on that. But for right now, it's something to watch very closely and be mindful of.
So basically what he's saying here is if we fail to kind of hold these all-time highs around 525 or so on the SPY, then if you fall under this purple line here, which is your 50-day moving average, things become quite problematic, and that's where you can retrace to the downside, because a lot of the times what you see is not just one, fall and bounce, and that's over with, right? Take a look at what you've seen back here in late 2023. You fell, boom, you got a bounce. And then you ended up falling lower, and then you got a bounce, and then you fell even lower. Now, this latest bounce has taken you back to all-time highs, so that's a little unusual, but given kind of where we are in the market cycle, it's not that uncommon to see a bounce back to all-time highs. But yes, if you do fall from here and you break that 50-day moving average, that short-term momentum moving average, then it becomes problematic. Then you could be looking at another low, which could set you back here into the 480s, 490s for the SPY. And this is the ETF. You could see another bounce and then a further low, which could set you back even further. So we'll see what happens. That's just what to look out for. And the root cause of really what to look out for is, I believe, the economy weakening. If the economy weakens from here in any kind of large degree or meaningful way, that's where markets will start to get a lot more fearful about a recession. So let me know what you think about this information down below in the comment section in that regard. Now, again, with Tesla, I do think this June 13th through August 8th period in time could actually send you well into the 200s, if not the low 300s, as long as the economy is not getting worse. So that is it. I would love your take on this down below in the comment section. I know there's a lot of different variables here with all of these 4 events, these 3 specific dates, and I would love your perspective down below in the comment section. Hit the like button as well as subscribe to the channel if you guys want to come trade with us live in real time. Every time I make trades, I do send out alerts for better or for worse. Check out that link down below in the description of this video. You guys have a great rest of your day, and I will see you in the next one.